Good evening, each and everyone. Today I'm going to be revealing on how we treat the Forex chart, right? So this video was specifically made for beginners, right? So I'm going to be showing how to trade Forex step by step, right? So today I'm going to be sharing how the market moves, right? So guys, before we start, hit the sub button, click the notification bell, and drop a comment below, right, on what you think about this video. Okay, so in the forex market we have three structures, right? We have three types of structures. So the first structure, we have the bullish market, right? So the bullish market is like this, right? The bullish market is like this, right? So if you watch this closely, you can see that the market moves in a certain pattern, right? There's some kind of steps that you see on how the market moves, right? Because if I were to draw something like a line, like it's not gonna be perfect, but then I'll try to put it actually that if I were to put something like this, you will see that whenever the market reaches this blue line, it reverses, right? Firstly, it was here, the market touched here and reversed. It touched here for the second time, it reversed again, right? And it touched here for the third touch, and the market reversed. So if you check this, it shows us that there is a relationship between this line here and the market itself, right? So the market is made up of higher, this market actually, which is the bullish market, right? It is made up of higher highs and higher lows, higher highs, higher lows, higher highs and higher lows, right? So this is a buying market. Why am I saying it's a bargain? It's a buying market. We have the higher high here, the higher high, and the higher low, the higher high, and the higher low, right? Even here it's a higher high. So if the market were to move like this, if the market is here, I know that I had an higher high, right, and a higher low. So if a price is here, I already expect the market to do what? To go down, right, and trade what? A higher low, which would then tend to buy again, right? Which we will be having a higher high here, right? So this is how you spot a buying market, right? Which is also known as a bullish market, right? So in a live forex market, you will definitely find this in this kind of a way, right? In these kind of structures, right? Where you can see that the price moves upward, right? Therefore, it corrects and it pushes up again and corrects, right? And pushes up again and comes back down and pushes back up, right? So we have two ways in which the market moves, right? The market moves in an impulse correction and an impulse, right? So this is a correction. Okay, so firstly, in our bullish trend, right? In our bullish trend, in order for us to take a trade, we must first check the third touch, which always gives us big moves, right? So you might be asking yourself, what do I mean? Okay, if the market gives us something like this, uh, something like this, if I draw a trend from here to there and to the downward from here to here, the market will do what? This is the first touch, right? And the second touch and the third touch. On the third touch, we expect a touch in this trend in the blue line, right? Which is known as a trend line. Okay, so we expect the market to touch this trend and reverse, right? But then before it reverses, you must have something like this, which is a correction, right? And we will look for further source, right? So always when you're trading the market, the third touch always have the bigger moves. Okay, so this is the bullish market, right? This is the bullish market. And what are we looking for in a bullish market? Always in a bullish market, we looking for buys, right? We're looking for buys. Okay, because if you can check, if I draw that line again here onto the downside here, you can see that when the market reaches this point, the market, like you see the clear moves to the upside, right? So if you will take a trade here, it will be less for yourself to be taken out, right? Because when the market gives you straight moves like this, you will have less chances to blow your account, right? So, us as Forex traders, we're looking forward to enter our trades in these positions, right? In these positions, rather than entering a trade here whereby it will tickle first before going to the downside, right? Because here the move is not clear. Because if you were enter a sell here, the market can take you out again, and it's bad, right? So always you take a buying position here, right? You're taking a buying position here, right? Because the market moves like this. This is a trend line, right? Parallel lines. We have a touch there, a correction, T-shape, a buy, a correction, T-shape, then a buy. Okay, so this, let me change colors, right? Let me make this one red, right? This one is red and this one is black. So actually, when the market is here, when the market is here, this one we can take it as a floor, right? And this one as a ceiling. This one is a floor, and this one is a ceiling. The market will go to the ceiling and bounce. When the market reaches the ceiling, it will then reverse, right, to the floor, right? When the market is at the floor, it will bounce back to the ceiling, right? So at the ceiling, the market sells, and at the floor, the market buys. So They are specifically known. This trend is a resistance, right? Because the ceiling resists this this the market actually. It resists the market to to break this and go there, right? So the market, this thing, this resistance blocks the market. Therefore, the market tends to reverse and go back to the support, right? This is support, okay? This is support trend line whereby the market, when it buys, here the market breathes, right? It breathes, breathes, breathes. When it reaches here, it buys, right? It's the exhaustion, actually, right? Whereby the market is getting exhausted here in the correction, right? As I've stated before, that the market moves into three ways, which is the impulse, correction, and the continuation, right? Okay, so right now I'll be diving to the second market structure, right? So the second market structure is the bearish market, right? So what do I mean by the bearish market? The bearish market is the opposite of the buying market, right? So in the bearish market, we're looking for selling opportunities. Okay, we're looking for selling opportunities, right? So if you check this, if I can put those lines again here, if I can put those lines again here, they align right here and reach here. Like if the market reaches this point, we will look for souls. Okay, look for souls in these levels. Okay, so before I continue again, I'll look for some people to drop some questions and I'll definitely reply on that, right? So let's continue. On the selling market, we look for source, as I've stated, right? And it's still in this chart on 1, 2, 3. Third touch has most massive moves, right? So when you take a trade here, it is more uh, accurate, right, than taking a buy here, thinking that the market will buy and stuff. Right? It can buy, but then it can buy if what? If the market have been doing this, if the market came like this and do this, right, and do this, it will then we will therefore look for buying opportunities because we will be having this trend here, right? We'll be having this trend being broken, right? You can see that here. Let me use this different color. Here you have these lines, right? The trend lines. So the market have been selling, selling. Therefore, when it breaks this trend, it shows that this trend is no longer useful, right? So, but then we look for before we can be able to say the buying setup, we have to check on what is being formed next, right? Because the market can do this, it can do this and breaks the trend and correct here and goes to the downside, right? Can do this can do this. You see, on a third touch, we broke this trend, but then at the end of the day, the market went back inside these structures. Right? The market went back in these structures. Okay, so in the bearish market, we look for selling opportunities, right? And we have lower highs and lower lows, lower highs, lower lows, lower highs and lower lows, right? Whereby we have lower high, lower low, lower high, lower lows, lower high, lower low, lower high, and lower low. So if the market is here, if the market is here, I already expect the market to push to the upside and create what? A lower high. Right? After a lower high, we sell. Okay, so this is the overall selling structure or a selling market. Okay, so we have another market structure, right, which is the ranging market, right? This is a ranging market. Okay, so guys, here what's happening, you can see that, like, with if I will connect this below here to the top, you can see that whenever the price reaches this point, it drops, right? Whenever the market reaches this point, it drops, and whenever it reaches this point, the market buys, right? Which shows you there is a relationship between these two lines, right? These two, it's a ceiling and a floor. It's a ceiling and a floor, right? Which has stated that this one, it's a resistance, right? And this one is support, right? Okay, so when the market reaches, let me draw it again. My drawing was messy, right? So we can be able to see that when the market reaches this level, the market does what? It sells. Here, the market sold, right? It sold here, it sold here, it sold here, it sold here, right? And when the market reaches this point, it does what? It buys, right? So, what we understand from this market structure, we can see that we sell at the high, right? And we buy below, right? So this is the third market structures. Okay, so guys, tune in for the next video. I'll be dropping below, so click the notification bell and share, comment below on how did you find this video interesting, or any questions. I'll be able to take any of them. And thank you for tuning in. Thank you.